Hey, Cal here, and I wanted to share this deal that I'm looking at right now, as an example of how you don't necessarily have to have a lot of money to get started investing in mortgage notes. And this is one of four that I've got my bids accepted on. They're all small balance notes, meaning that the purchase price or the bid that I've gotten accepted to buy these notes is a small amount, and the borrower owes a small amount on the mortgage, okay, the principal that they owe. So you can get going with as little, in this case, I'm paying $18,000 for this note, and that's not a lot of money, really. Like, most people think that if you want to be a real estate investor or a note investor, you've got to have hundreds, maybe even millions of dollars to invest. And that's really not the case. You can find nice little deals like this with great returns. Okay, so I'm going to break down the numbers here. This is a property, or secured to a property in Saginaw, Michigan. It's a contract for deed, which is very similar to a mortgage. Okay, so I'm buying this. It's performing, which means that the borrower has been making her payments, and she's been making her payments for, I think, 21 years, because it's a 30-year loan. And the maturity date is 2043. So right around 2013 is when she got into this contract for deed, and she's been making her payments at least for the last 2 years consistently. She's been a great borrower. I've been looking through the payment history as well as the servicing notes, so I've seen kind of this particular property owner's behavior when it comes to communicating with the lender and making her payments, and so she looks like a great borrower. And right now she owes $25,000 in a first lien land contract. That's how much she owes, and she's paying about, I think, 9.5 or 9.9% interest on it. And so she's about halfway through the loan and halfway through owning this house free and clear. So I'd imagine if she's been here for 21 years, she'll maybe stay here for another 19. And this could be a nice little performing asset that puts a little bit of cash in my pocket every month. Now, you can look here, the principal and interest payments only $245 a month, right? So this isn't going to change lives, but think about it. If you were to invest, $18,000 to a small note like this, you're getting $250 a month passively every month coming into your bank account month after month without really doing a lot. And if you were to buy 10 of these, that starts to get life changing, right? So it's all about just building a little bit at a time, acquiring notes a little bit at a time, and getting that cash flow building up. And different streams of income coming all over the place, they start to add up, and they can really change your life and buy yourself time freedom, financial freedom. And that's one of my goals, is to acquire as many notes as I can that are performing, or that I can get re-performing, and just start collecting those paychecks, right? So in this case, the yield, which is, if I were to take that $245 that I'd be making from the borrower in principal and interest payments, you take that, you multiply that by 12, and then divide it by the investment of $18,000. That works out to a nice yield of 16%. So 16% return on my investment, okay? And it's secured to this piece of property. So it's secured to real estate. It's not, invested in crypto or the stock market or something where it could disappear overnight. You never know, right? Values could just plummet. So I like real estate for that reason, is because this house isn't going anywhere, right? People are always going to need a place to live. There's always going to be a market for housing. It's going to change, but there's going to be people in Saginaw, Michigan that are going to need a place to live. So if I ever had to, heaven forbid, had to foreclose on this borrower and sell off the house or rent it out, I've still got a lot of options to keep my investment and, get out of my investment and get my money back. And that's what I love about note investing and real estate in general, because I've got a piece of property, a physical asset that's securing my money. Okay. Now you also notice there's the IRR of 13.7%. And what that calculation is if I factor in that I'm going to be holding this note, so I'm going to buy this note and hold it until 2043, and that borrower keeps making her payments until then, until she pays it off, what would my return be? And that factors in the fact that she's paying down the principal balance over time. So every payment she makes, a little bit of the principal balance is going to be paid down, right? And the closer that she gets to the maturity of this loan or this note, the more of the principal is being paid down from that payment. Okay, so that's what that number figures into, and the IRR on this note is 13.7%. So that's my actual return on investment if you factor in, if I were to stay into this until she pays it off. Okay, so double-digit returns secured by real estate, not a huge amount. You don't need hundreds and millions of dollars to invest in real estate. So I wanted to share this one with you. And the last point I want to make about this note is don't let looks deceive you. This house obviously doesn't look great. There's a lot of kind of junk and stuff around. It's not in the best of shape. But I was comparing this note to 3 others that I'm looking at right now where the houses looked a little bit better, better condition, maybe a little newer, but the borrowers weren't as solid. So when you look at the borrower history and the payment history, this borrower here, the lady that lives here, she might not be much of a housekeeper or up on house maintenance, but she consistently makes her payments and she communicates with the lender. She's really nice. She's communicative with the lender currently, and she makes her payments. And that's huge when you're buying a performing note, is you want to know that that borrower is probably going to keep on making their payments, and they're responsible about it, right? And so sometimes that's more important than what the actual condition of the house looks like.